Hey, what's going on, guys? So this is going to be the video I promised you from previous. This is going to be the tool that I'll be using as sort of a, I don't want to say gauge when the top is because I hate that. It's extremely difficult to know when the top is to any asset unless there's like an ending diagonal. Um, but nonetheless, this is a very valuable tool and I frequently reference it in my trading. For those that are unaware, these are Bollinger Bands. And what Bollinger Bands do is they essentially measure volatility. If you can see here, the bands contract because volatility. So, what I mean by volatility is if you look at the lows here, it's $2. Now look at the highs, right? So it's $7. So there's the trading range is very tight. So if you get a very big, expansive move, what you see is the Bollinger Bands expand. So that's what you're going to see during a squeeze. So again, here you saw the Bollinger Bands begin to contract, and then you see the expansion because the volatility increases because you get this big parabolic move that drives up the price. Now, the thing about parabolic moves is they have a velocity to them, meaning they have a momentum. They are going straight up. Okay. So whenever it loses that momentum, that velocity, especially during a squeeze, because during a squeeze, you're not going to see these periods of uh, price goes up and then it just kind of goes sideways for a week and then go up more, sideways, more. There'll be halts, but there won't be any price action in between the halts. So it'll just stop and then it'll continue. So, whereas opposed to what a squeeze would look like, is it's essentially just going to look like this. It's going to go straight up and then it's going to come right back down. I need to delete this. So now that you kind of understand what we're looking at here, how does this give you value? Well, if you come in here and what you'll notice is that during these very expansive moves, we're on the daily chart here, by the way, you can see how it's on the red line, right? That means that you have very extreme level of volatility as price is pushing higher, higher, higher. And then what ends up happening is it loses its momentum and it starts trading sideways. So as price moves outside of the Bollinger Bands, what that's telling me is that it's not keeping up with its speed. Because in order for it to stay in between the blue and red Bollinger Bands, it has to keep ripping and ripping and ripping, meaning that the momentum is still there. It's still pushing higher. It's still climbing. So if, let's just say for argument's sake that this was the squeeze, if I see this, right, and then I see price come back down and start moving outside of the yellow or Bollinger Band, I'm going to be looking to get out on my runners. So if that runner I talked about in the previous video, if this happens at 5,000 and then I'm still holding that runner and I see it do this and start moving out, well, I'm going to be getting out. What I'll do is I'll just pull up a Fibonacci retracement, and once it comes back here to the golden zone, I'm just going to close it. So that would have gotten me at $61 versus the up at 72. So I mean, I'm pretty close to the top, but I don't want to continue to hold it, right? And I mean, it might come back up to the top, and I've seen it where here's a good example. So, but this isn't the squeeze, keep in mind. So price comes down, moves back up a little bit, and then continues down more, but the momentum was still there, right? So it was able to drive it lower. Now, I'm going to be looking at this in relation to where price is. So, for example, if it does something like this, where, excuse me, maybe it's not on this one. Let me go down to a smaller time frame. Okay, here we are. So here, for example, if it does this and then it falls out and it's at, I don't know, $100 or $80, I'm really not going to be concerned with it because to me that the squeeze hasn't happened yet. But if the price is really high and we're up here at like 5,000 and I've already hit some of my targets, and on my trailing runner, I'm already at a point where I'm starting to get nervous because it's getting into that more risky price bracket. and then in combination with it being in my more risky price bracket, and I see something like this where it's losing its momentum, I'm just going to close out. That's fine. It's a red flag to me because I know that it could be losing momentum. I'm seeing momentum loss because it's not able to sustain the expansion of the Bollinger Bands. So for example, on Volkswagen, if this was the peak, you would see it stay in the red and blue or yellow the whole time. It would stay in between here, right? So if you start seeing these kind of slow consolidation patterns moving sideways and now it's outside of the Bollinger Band, that's a big red flag to me because now it's looking like it's lost its momentum and it's not able to sustain it. So it's not something that I would use just by itself, but kind of just logically kind of filtering out, it's something to consider. It's something that I will be considering during the squeeze. And I mean, it's not foolproof, but if I see that on the daily chart and I still have my runner at play and I've got several, the price is several $1,000s higher than what I wanted my runner to exit at, if I'm hoping to get 3,000 on my runner and it runs and it's at 5,000 and then I see it coming back in and it's losing momentum, well, then I'm out. I'm going to close that trade. That's a big red flag to me. I've got a ton of profit that I'm happy with. I'm okay with it closing out and then it continuing higher because it's looking like it's losing momentum at that point. So then, so that's pretty much it. This video doesn't take too long to explain. So if y'all found that content valuable, please subscribe to the channel. There's plenty more to come, and I'll talk to y'all soon.